It's been pretty much forever since I looked at my portfolio, so let's look at it today. Welcome back everyone. I am so sweaty because I've just been to my first climbing session in about 3 months. Check out them hands. Fucking sore. But I realise I haven't been through my portfolio on here for ages, and a few of you are reminding me of that. So today, as it's the end of July, the end of a long ass month, and I've just crossed 10,000, I'm going to go through it. Fuck it. 10,000 is a pretty good milestone for me. That's kind of the amount that I would normally save up in a year. But the difference is I'd probably just spend it on something. I'd buy a new car or something like that. But now I've tried to change my mindset, and all that money I'm saving, I'm trying to reinvest into the stock market. Really sorry, I'm so sweaty. Look at that, real sweat. It's been about 3 months since I've done any proper exercise. Feel great. Yeah, I probably look a bit greasy on the old camera. But just before I get into my portfolio, I'd like to just answer one question about exchange rates because it's coming up a lot, particularly with Trading 212. Centaur14 asked this about an hour ago, so I need to answer it. He asks, I just started using this about a month ago. I'm assuming that's Trading 212. Are you worried about the dollar-pound rate? I bought Disney and the actual dollar loss I have on my position is about 127. But because the exchange rate moved against me, I am losing about £260. I'm checking if they will let me convert the account to dollars, so I'm only exposed to the exchange rate at the point of withdrawal or deposits. Okay, so this is pretty common at the moment. Because of the Federal Reserve printing so much money, it's devaluing the dollar. So for example, if we went to America for a holiday right now, we'd be living like kings. Our money would go a lot further over there. In the same way, if they came over here, they'd be pretty poor. It's kind of been like that forever. The two currencies have been getting closer together because the pound is generally weaker now. But at the moment, while the Fed prints off 26 trillion or whatever it is, it means the dollar has got a lot weaker very fast. And that's showing up in our portfolios. And it's happening to me too. So look, if I go into 3M, I can see that my average price on 3M is $145. My sell price is actually $151, which means if I sold it, I'd be selling it for more than I bought it. However, my return is £2.85 down. A lot of people are looking at this and thinking, why is it doing that? Well, according to Trading 212, it's because of this exchange rate problem we've got right now. And it means a lot of our American investments are worth a little less than what we paid for. But Centaur wants to put his account into dollars, so it only shows what it's worth in dollars. I don't see much point in that, to be honest, because you're going to be affected by the exchange rate no matter what. And in fact, this is a pretty good indicator of how bad the exchange rate is. When you withdraw it in dollars, you're still going to have to convert it to pounds then. I kind of get the emotions of it because you're looking at it and you're going, oh, everything's in the red. But does it matter? I'm not looking to sell it now, so why do I care what the price is right now? That's kind of how I feel about it, and that's a common theme of my channel. Also, think about it. America's dollar is really cheap at the moment. If you sell some assets, you're probably going to make a loss. But if you buy some assets, they're going to be worth a lot more later. So right now, all I would say is that while a lot of companies are still undervalued, the dollar is undervalued as well, and you're going to get more for your money. So it's just a better time to buy rather than sell. I hope that covers that. I personally would like to see a real-time exchange rate, which we see with Trading 212. And I can't think of anything worse than having to withdraw £100,000 and then only get £90,000 from it when I withdraw it in the future. Does that make sense? Does that make sense? Basically, if you know what the exchange rate is straight away, you'll get that money back. But if you don't, you're going to be heavily disappointed in the future. So yeah, the exchange rate problem is a little bit of a shit problem when you're just looking at it and you're going, oh, my investments are a little bit down more than they should be. But I'm trying to think of it the other way. American assets are a lot cheaper right now. I'm going to continue to buy it. And to be honest, this week I've tried to invest in more American stocks for that reason. Okay, onto the portfolio. Let's just knock it out, get it done. My portfolio currently sits at 10,229. Ooh, 10,228 now. And I finally crossed that investment threshold of 10,193 today. That is a big deal for me. I want to take this opportunity today to look at everything that's gone on since I left Hargreaves Landsdown. So I had about 10,000 in Hargreaves Landsdown when I started. That was mainly in mutual funds and in index funds that Hargreaves Lansdown had completely recommended to me in their Wealth 50 list. I was getting really fucked off with Hargreaves Lansdown, so I decided to pull a lot of my money out before the crash. Totally lucky. Can't believe it. I think in the end I was left with about £3,000 with Hargreaves Landsdown. They were mainly stuck in mutual funds and FTSE 250 funds. Oh, absolutely sucks. So I lost about 3,000 there. That's pretty much just stuck in there. I'm never going to sell it. I don't sell when things are in the red. So that's just staying there for as long as possible. And then with the rest of that money, I built up a £4,000 emergency fund. So that's sitting in premium bonds right now. I'm still deciding whether 4,000 is the right amount for that. I might bring it down to 2,000. Not totally sure just yet, because I feel like I could make use of that money. I'm still not totally sure. We're going through a crap time right now, so maybe it is a good idea to have a bit more lying around as an emergency. And then the rest of the money has basically gone into the room that you're seeing right now. Just have a quick look around. Woo! Loads of space. This is actually my garage. Pretty mental, right? Let's go back there. Boop. So this room is now my office. I use my office for work, and I use my office for one of my hobbies right now, which is standing here talking to a camera for hours. But I think in total, the cost of all this has now come to about £2,000. I was going to do this even if I hadn't started YouTube, because we've got a new baby coming and we've basically created another room in the house. The room I was recording in before is now the baby's room. So we've kind of created an extra room with this. It's still basically temporary. The boards that I've put up are easily rip downable. I haven't taken the garage door off the front. The idea of that is that if we come to sell the house, I can just rip this all down and it goes back to normal. But for now, it's a great studio space, and I think I'm also going to be able to use it as a tax write-off because of YouTube. One way to make money, right? I think the tax write-off that I'll get for the space in this garage is going to be more than I actually get paid from YouTube. Because believe me guys, unless you're making a video every single day, YouTube does not pay a lot. And I'm fine with that. This is basically a hobby. I like talking about investments, and I love talking to the guys on Discord. It's really fun. And this YouTube channel keeps me in check. It's a really good strategy for me to stick to my word and not like sell stupidly. Because I know you guys will make me pay if I step out of line or do something that's totally off message. Something that I can't justify. Jesus, I'm so sweaty still. So yeah, after I sold pretty much everything out of Hargreaves Landsdown, I was left with basically nothing. And over the past 3 months, I've saved quite a lot of money to get investing. The other big thing is I had to wait till April 4th for my ISA to open. So I've missed out on a month of gains after the crash. It's a real shame because it means I have missed about the best 10 days of the crash. And that severely impacted the return. I also didn't invest in Tesla, which is apparently how everybody made their money in this crash. That's okay, it's not in my strategy, it's not in my remit, so I'm not really bothered about that. I know that if I deviated from my strategy for some reason that I don't know, I would have lost out. I'm sure of it. Okay, I'm rambling now, let's get on with the portfolio. Okay, we're sitting at 10,228. 10,229 roughly, and we have an investment of 10,193. So the majority of my investment has been my savings. We're sitting at a return of 35.55. It's not very big. That's not very big, and I can tell you why. Because it's a time-weighted return. It doesn't take into account dollar cost averaging. As you can see, I've got 28 investments, and I've got a few top ones, which are probably the ones that you'd expect from me. What I'll do is I'll very quickly run through each one. I'll tell you why I'm in, tell you why I might be out soon. I don't know, whatever comes into my head. So first of all, we have 3M. 3M is that industrial company I talked about last week, and I am up on the return, except the exchange rate is absolutely killing it. Because it only had a slightly better than normal earnings report, people lost a bit of faith in it and they've started to bail out. But that's pretty good news to me because that means it's coming back within the range that I want to buy. If I'm going to be buying more 3M this year, I want to be buying it about 140, 150. Next year is when I want to look at it over 150. That's just because the revenue should go up by then. Next up, AT&T. Now, I'm not going to go into AT&T too much because I've got a video prepped for it sometime next week. I'm going to go into heavy detail about AT&T and why I'm in it. At the moment, I still want it, but it's at $29, and there's a nice resistance point about $22, which if it goes down that far, I'll really bag some big ones then. Next up, we have BAE Systems. BAE Systems is a British military company, blowing shit up, that sort of thing. BAE's price has pushed up today, and I'm glad it has. This week they've had a great earnings report. I knew they were going to have a good report. I've just been sitting on it for ages, and hopefully now BAE Systems is going to recover where it's supposed to be. However, today it has only pushed up to its resistance line, so it's going to need a lot more push to get up. But I think when it flips that resistance, like if we have a war or something like that going on, BAE's price is just going to shoot through the roof. I'm just sitting waiting for that moment. Because Donald Trump is getting itchy, right? He's probably going to go do something in Iran again to muster up a bit of help. Well, that's what he usually does, right? Then we have Coca Cola. Coca Cola is just a sitting stock for me at the moment. It's absolutely doing nothing. It's just popping its head up and then boshing back down. And I really don't know why. There's absolutely no news on it. Earnings report was fine. It's just doing nothing. No one's interested in it. That's basically it, isn't it? No one's interested. No one cares about Coca-Cola anymore. What a shame. Everyone wants to buy EV cars and everyone forgets that we like to drink stuff. Diageo next up. It's having a good month. I'm guessing because the pubs in the UK are back open. I can't really say much of it. I don't expect it to go up anytime soon. I'm literally just waiting. It's got its earnings report coming out. I think they delayed it a couple of weeks. It's not going to be good, guys. It's not going to be good. If you're holding Diageo like I am, just expect a bit more pain for a while. Even though I'm in the green right now, there ain't no way I'm selling. Just going to keep holding, just going to let it ride. iShares Japan, I'm in this ETF because I have no access to Japan. It's as simple as that. I want access to Japan, I want access to Nintendo, etc, etc. I've got it. Unfortunately, Asian markets were doing very well and they've taken a slump. Same reason as America. Just got to wait it out, guys. Just got to wait it out. iShares European Property is a REIT ETF just because I don't know what the REITs in Europe are like. I'm convinced REITs are going to be very, very good for the next 10 years. That's why I'm in a lot of them. The Euro property one is just so I've got a little bit of exposure to that market without actually doing any work, really. That's basically it. iShares Global Clean Energy is an absolute winner. I can't say it any better than that. It's full of solar, it's got a little bit of wind, and it's even got a tiny bit of hydrogen in it. Those stocks are super popular right now, and that's why I'm in it. I don't feel like I've got the capability of assessing companies which don't really make a profit yet. And a lot of the companies in this ETF don't do that yet. There's a couple also that I don't have access to, like Vestas, a really popular wind company that Trading 212 doesn't have. Johnson & Johnson is pretty flat. It had a good earnings report, it had an exceptional earnings report, but it should start to see a price hike because it is the American government's favorite opportunity for a vaccine. And I think this week Johnson & Johnson tested their vaccine on monkeys and it proved to be like 100% effective. So that thing's on its way now. And the US will choose an American company over anyone else. They just will. That's what they do. Still a lot of competition in that vaccine race, but Johnson & Johnson has so much more backed up. It just needs to stop giving cancer to pregnant women. Whew. Is this a long one? Are you still with me? It's a long thing going through this, isn't it? I can't really see how this is interesting to anyone. With that in mind, here's a picture of my dog in a superhero suit. Hopefully that's entertaining for 1, 2, 3 seconds. Okay, we're back. McDonald's. What can we say about McDonald's? Not a lot. McDonald's is just going to keep doing what it's doing. McDonald's had a fine earnings report. Nothing special about it. McDonald's has reopened. Has less revenue because of that. What more can I say, really? I am concerned about McDonald's growth in the future. It's always going to be around, I get that. It's always going to diversify, I get that too. But everyone knows that it's basically a real estate trust now without the tax incentives. And to be honest with you, a lot of the franchisees are getting a little bit pissed off. There could be trouble brewing there. I'm still waiting on that one. Next, we've got Medtronic, which is one of my newer holdings. Medtronic is a healthcare company that has been heavily affected by the downturn. It's not really a medical company that has helped combat the virus. It's one of those medical companies that has been affected by the shutdowns in unnecessary treatment. Eventually, when hospitals start to open properly again, that's when it's going to have its heyday. That might not be till mid next year though. Winter is going to be tough. If the virus comes back again, it's coming back in winter and it's going to hit us so hard. But what I'm banking on there is that America will not shut down its economy again. I really, really don't think they will. They are going to be so stubborn on this time. They want their economy going. And the Republicans will not give a shit about what the Democrats say. They're not going to. Unless it's ridiculously big. But it's ridiculously big already. So how much worse can it get? He said optimistically. Merck & Co next up, exactly the same story as Medtronic really. Well, less than Medtronic, but still affected. Merck's products are essentially non-essential right now, so we're just waiting. A lot of Merck's new products are still waiting approval, which has just been put back because nothing's going on. Again, another company which I think is just as good as AstraZeneca, but it's not getting the same love because it doesn't have the word vaccine written all over it. Microsoft, I don't really have to go into Microsoft, do I? I'm just lucky that I got in there early enough. Microsoft was always going to be a company that I'd buy, and I'm still up because I got there early. I got there early as I can. I got there probably on April 5th, and that's why it's still up. That's all it is. I reckon it's going to be one of those stocks that just comes together with the S&P 500 eventually. Again, Microsoft had an okay earnings report. Earnings, man, nothing really happened. I haven't even cost averaged into it because it shot off so quickly. I think it's overvalued at its current price, so I'm not buying more. I'm just going to hold for a long time until everything else catches up. Simple as that. Novartis, Swiss pharmaceutical stock, which was supposed to have so many cool non-essential drugs going into the NHS this year. Loads. It's losing a lot of value at the moment, and I don't know why. I can't figure it out. There's no news on it anywhere. You only really buy it in pharmaceutical indexes, so I think that's it. I think that's why it's happening. Pepsi. What can I say? Pepsi should be higher, right? Everyone agrees. Pepsi should be much higher than this right now. You could technically say it's a stay-at-home food stock, but because no one's been eating out, all of its post-mix stuff is just not selling at all. So I'm guessing that's why Pepsi is another one of my stocks that is trading sideways. But it is a food staple. It's just one of them stocks that's not going to move right now. Realty Income is my biggest holding right now, I think. Not really doing anything to it. I'm not actually buying anything right now. It's one of the top dividend payers. I'm just letting everything come up to its level first before I start boshing in again. It's always getting a little bit, but because I've just got carried away, it's not getting loads. Rio Tinto, basically doing very well. Once China opened up, it just shot off because China want iron. What can I say? It's kept its dividend. It's just going to do really well. Keep going, Rio. Keep it up. Just hold off those Aboriginal sites, right? Yeah, bad press. Royal Dutch Shell. Royal Dutch Shell has taken a beating today. I haven't bought any Shell for a couple of weeks now. Still kind of waiting. Kind of halted my cost averaging a little bit. I'm now waiting for it to go under 10. If it goes under 10, I've said on the Discord, I'm going to remortgage my house. I'm not going to remortgage my house, like, be clear. But I think I will double my position in Shell if it goes under 10. I think it's a company that's going to take a while to recover. It's dropped its dividend so it can bring its barrel price down to 35. WTI and Brent are both 40 right now, I think. So it's pretty much the only major oil company that is actually profitable right now. You've got Exxon, Chevron, all sitting in the 60s. BP's oil price is 56, I think. That's its break-even price, so each barrel needs to be worth 56 for it to break even. BP does plan on bringing it down to 35 as well. I don't know how it thinks it's going to do that, but its earnings report is next week, and I'd expect a dividend cut going on there. I just think that Shell has been the most proactive in all of this. I see it in the future as a hydrogen and a renewable stock. Even though renewable is really popular, the charts all do say that in 50 years, 50% of our electricity is still going to come from oil. We're not getting off it that quickly. So in the meantime, especially for the next 10 years, I feel like Shell is going to come back big time. Next up, Segro. Segro is another REIT that I really love. I can't really find anything wrong with it. It's about to do a stock split because it's trying to refinance. It's aiming to buy a lot more in Europe to bridge that gap. It's another British REIT that's exposed to Amazon, so it's going to do really well. Very little retail portfolio, so I'm happy with it. Tritax Big Box is very similar to Segro, but you might as well write Amazon on it. The only reason people are buying Tritax is because it's got 14% of its portfolio in Amazon. That's 14% that's totally secure for life. The rest is all other big box, so you might as well just buy it. You might as well just say, these are warehouses, we're gonna need warehouses, here you go, here's my money, take my fucking money. Oh, I missed Store Capital, as if I missed Store Capital. So Store Capital is my newest holding. I only bought it recently, but I went pretty hard on it. Now, we will go into this in a lot more detail on a different date because I'm gonna go do a REIT video eventually once I've figured out how to do it, because REITs are really complicated. But Store Capital is one of my riskier REITs. It's not ridiculously open to the retail sector like Realty Income is. It's much more open to the service sector, like anything like laundrettes or gyms, anything like that. Anything that you need to go to that you can't do online. That is Store Capital's remit. It buys anything that you have to go to and that Amazon can't take off them. And on top of that, it only accepts 7-year leases, so it's really safe. Like I said, one of my newer holdings, one of the REITs, I believe REITs are going to do very well in the next 10 years because low interest rates are going to allow them to buy. Tyson Foods. Tyson Foods is a stock that's just doing fine. I'm right along Tyson Foods' average line because I've just cost averaged into it. I kept buying as it kept going up, so my return is basically zero. That's just how you do it, guys. And unfortunately, what that cost averaging does is it brings your major return down. So instead of being money weighted where it would show off my proper return, it's actually time weighted, which means my return is basically zero. I'm not interested by that green number in the top. My return's coming from dividends and it's coming from cost averaging over time. That's just it. The only marker that I have is that I'm in the S&P 500 ETF and I'm about 2% behind. That's kind of how I'm measuring it. I'm even a bit behind on my cost averaging into that as well. So if I was bothered, I don't think I'm actually that far behind the market, if I'm honest. Right now though, I haven't got an accurate calculation of that, so you're just gonna have to take my word for it. But Tyson is just another one of them staple stocks that's going to be around forever. It's had a rough time recently with COVID and a bit of workers' rights problems. That's all short-term news. The only big problem is the dollar versus China because it sends a lot of meat to China. I don't know if that meat's going to be worth a lot less right now. But other than that, I think Tyson Foods is definitely opened back up and it's on its way again. Unilever. Unilever is one of the ones I totally did not expect to boof this week. I have no idea why it went so well. The earnings report was exactly what I thought it was going to be. I just expected everyone to know that as well. But for some reason, it decided to jump 14%. Maybe it made some news in America or something like that. I don't know. Either way, growth-wise, it's doing fine and it's kept its dividend. I'm not going to ask for any more of that. That's just given me 14% to dollar cost average into. FTSE Emerging Markets ETF, I need to put some more money into this. It's just been totally ignored for a while because I've been putting so much money into everything else. You can't ignore your emerging markets, guys. These guys are going to do well. You know, all the Africa and Asia, that sort of thing. They're up and coming, man. They're up and coming. I've got to get a lot more money in this ETF, and I'm in this ETF because I don't understand the companies that are in it. It's as simple as that. If I'm in an ETF, it means I don't have time to go through all those companies, but I know the sector is going to do really well in the future. So ETF, right? That's what they're for. That's what I use ETFs for. The Vanguard S&P 500 ETF, I am only in this ETF because I want to track my progress against the S&P 500. Because Trading 212 doesn't do a money-weighted return, I'm going to cost average into the S&P 500, which is probably a good idea anyway, but I'm trying to keep it at a similar rate as my normal portfolio so I can see where I am roughly against it. There must be a better way to calculate that out there, but I figured putting into the S&P 500 is probably a good idea anyway, so that's what I'm doing. Visa, today I bought a lot of Visa to take advantage of that dollar weakness. Visa is one of my favorite companies. I'm buying a lot of it because it's still one of them good growth companies. Now I know people are going to look at me and go, oh, you're a dividend investor. That's not a very high yield. It's not all about the yield, guys. Dividend investing is a tool to keep me emotionless. Visa has a very good payout ratio. It's one of the safest dividends out there. The idea is that because it pays a dividend, I now have a tool to tell me when I need to sell it. If Visa ever decides to cut its dividend, then I need to reevaluate that company because something's gone wrong. I use the dividend investment strategy as a tool to keep my emotions away from the stock market. So I don't just sell because Shell's gone down 16% or whatever it is today. Believe me, I have a lot more information on that is coming in the next few weeks. But Visa, great company, safe dividend, it's going to grow, cashless society, blah, blah, blah. And finally, Walt Disney. Walt Disney, gotta wait, guys. Gotta wait. Disney Plus, doing okay. Parks, reopening. Dividend, cut. I'm not moving on Disney now until August the 8th. August the 8th could go either way. Either the earnings report is going to tell everyone how much debt it's got and everyone gets a little bit scared, or nobody really cares and the price goes up. Either way, to me, I'm okay with that. I prefer to buy it lower than higher. That's why I'm waiting. No matter what the price is, I'm going to start buying it again then. I see Disney is going well over 200 in the next 3 to 5 years. So I'm just going to keep holding on and keep cost averaging. Oh my God. This was only supposed to take a couple of minutes. It's taken fucking forever. But there you go. I've showed off my portfolio. Ugh. Took a while. Props to anyone who made it through that. Thank you very much for watching, guys. The app I'm using is Trading 212. There's a link in the description below. If you wanted to sign up, you get a free share and one of my subscribers gets a free share as well. If you want to speak to more like-minded people, check out the Discord. There's loads of people in there chatting about stocks and getting all het up about the exchange rate. And if you enjoyed me rambling about my portfolio, please feel free to like, subscribe, and stop caring about the exchange rate.